Now, ahead of the US election next week, gold surged to a fresh record high as investors shrugged off data that may affect the magnitude of the Fed's rate cuts this year. Bullion rose to a touch over $2,790 an ounce on Thursday, narrowly beating the previous all-time high posted on Wednesday. Take a look at this next report for more on this.
Lots of interesting gold-related reports, mainly focused out of London this week. The first of which being that the World Gold Council estimated that undisclosed gold buying in the OTC markets, or over-the-counter markets, in London is both heavy and helping to drive gold spot prices further to higher nominal record high numbers. Who are all these undisclosed gold bullion buyers, you might wonder? Well, it's a likely combination of central banks who don't want that information yet disclosed, and high net worth investors who are getting in on the FOMO gold trade. Estimates for Q3 2024 gold demand show gigantic increases in investment demand from the prior Q3 of last year, 2023, a more than doubling recently reported. This catch-all opaque gold demand bucket called, quote, unreported demand, is consistently eating up about 1/3 of new line gold mining output. And odds are much of this is central banks in the emerging market world that are the major undisclosed buyers, along with high net worth investors finally getting in on the gold trading, given rampant Western record gold price media headlines this year. Another major story about gold, London, and India this week. The nation of India just disclosed another 102 metric ton reshoring of her official gold bullion reserves out of London and back to within India's borders. Let me show you what that looks like in real gold bullion bar terms. That's akin to calling up the Bank of England and saying, yeah mate, we're going to need to take back that entire row of our bullion by air cargo. Cheers. So now India has 324 metric tons of reserves split between London and wherever the BIS also has it hidden. One of the story's top comments with the highest like to not like ratio was the following comment by a likely Indian citizen who read the news. He stated, quote, move all the gold back to India ASAP. It is never safe to keep any gold in another country. Bring all the gold back to India before the year end. England is never a safe place for India's assets. Palki Sharma of First Post does an excellent job explaining the historical background of this latest 102 Indian gold London withdrawal story. Have a listen.
Yesterday was Dhanteras in India, a festival that comes right before Diwali. A lot of Indians like to buy gold on this day. It's seen as very auspicious. Just ask the RBI. Even they have jumped in on the Dhanteras craze. As you know, the RBI is India's central bank, the Reserve Bank of India. Yesterday, they revealed a key development. The RBI secretly shipped 102 tons of gold from London to India. 102 tons of gold. And this was not a purchase. This gold already belonged to the RBI. It was only stored in London. But imagine the logistics. Again, we're talking about 102 tons of metal, a bit like transporting 20 adult elephants over thousands of kilometers. So how did the RBI do it? Naturally, they have not revealed everything, but reports say special flights were chartered, security was stepped up, and once in India, all taxes and customs were waived. Overall, a successful mission. The RBI has vaults in Mumbai and Nagpur. Chances are the gold will be stored there. But why was this decision taken now? To answer that, we must go back to the 1990s when India was facing a financial crisis. It was running out of dollars to import goods. So the then government of India decided to pledge its gold. We're talking about multi-million-dollar loans. You can't get them in your local gold market. You need global trade centers like New York or London. So the RBI sent tons of gold to the Bank of England. This gold was pledged there in exchange for a loan. Of course, the loans have long been repaid, but India's gold remained there, and logistically it did make sense. The gold would be near the London bullion market, so if the need came, it could be easily accessed. Then why is it being brought back now? Well, because of two reasons. One, India's foreign reserves are very healthy now. They stand at $688 billion, enough to cover more than 11 months of imports. So the RBI is more confident. A repeat of the 1990s looks virtually impossible now. Secondly, because of geopolitics. Yes, Britain is on good terms with India, but equations can always change. And if they do, A big chunk of our gold will be on British soil. What if they decide to freeze it? Or worse, sell it off? That's what the West is doing to Russia. When the Ukraine war started, Russia had around $600 billion in reserves. That's gold plus currencies plus assets. Nearly half of that was held abroad, mostly in Western countries, $300 billion. And what did the West do? They froze those $300 billion in assets, meaning Russia could not access its own wealth. Now, don't get me wrong, India and Britain are not going in that direction, but it's always better to have your assets at home, especially if your economy is robust. The RBI is thinking along the same lines. They have around 855 tons of gold in reserves. 855 tons. Around 510 tons of that is now held at home. So more than half is within India. A similar operation was done in the month of May this year as well. The RBI brought 100 tons of gold from London, and now another 102 tons. Should we expect more in the future? Reports say the government is open to such operations, but not this year. And it's not just about repatriating gold, it's also about stocking up. The RBI bought 32 tons of gold from April to September. Gold made up 8% of the reserves in the month of March. Now it makes up more than 9% of India's reserves. So clearly, the Reserve Bank is on a buying spree. The question is why? Because gold is a safe asset. It is not volatile. It is reasonably liquid, and it can diversify your reserves. You may have noticed that in recent times. When there is a war or natural disaster, gold prices remain stable or they increase, which is very different from currencies or oil, which can go either way. So it's a good backup for central banks. It's good for them to have more gold. In fact, central banks hold nearly 20% of all gold ever mined. We have a list. The US has around 8,000 tons of gold. Germany has more than 3,000 tons of gold. Italy has more than 2,400, and so does France. But guess who outranks all of them? Indian households. Ordinary Indians are sitting on 27,000 tons of gold. I'll repeat that, 27,000 tons of gold. Yes, it's clearly an obsession. But in those countries, gold makes up almost 70% of government reserves. Compare that to developing nations. In China, it's 5%. In India, as I said, it's 9%. So expect this landscape to keep evolving. Of course, that's a discussion for another day. Today, it's all about celebrating this reversal. From pledging gold abroad in the 1990s to proudly bringing it back home now. It's a story of India's economic resilience and rise.
So further to our point about India still only having just under 10% of her sovereign wealth and savings allocated to gold bullion officially, whereas often unaudited Western financial powers claim holding up to around 70% of their savings in physical gold bullion reserves. China and Russia also have more catching up to do. While they have basically coordinated the timing and sizes of their tandem official gold bullion reserve declarations thus far in the 21st century, China still only has about 5% of her sovereign savings in gold bullion allocations declared. Russia just under a prudent 30% physical gold allocation at the moment. Worldwide, the average gold bullion allocation is still a pathetic 12% among central banks, but as you can see, it's growing with the nominal spot price of gold climbing. The world's central banks on net still hold way too many IOU bonds and foreign fiat currency issuances compared to their official gold bullion reserves. Obviously, the global bullion over bonds trade is only still now in its early innings. Both disclosed and undisclosed central banks and high net worth investors are increasingly moving in the correct direction. It's only in the later innings of this trade, retail normie investor hordes will finally figure out what's going on at much higher relative bullion valuations. After this short break, we're going to dig into silver news this week and see further how Indians are also flexing their muscles in that increasingly cutting-edge industrial and precious store value trade as well. Hello, this is James Anderson on behalf of SD Bullion. Smash the like button if you enjoy these bullion market updates. And be sure to visit sdbullion.com/sweepstakes to enter our free 500-ounce silver coin giveaway.
Make some room in your safe because a whole lot of silver could be coming your way. SD Bullion's Monster Box Sweepstakes is back, featuring 500 of SD Bullion's very own Silver Tree of Life coins in a monster box for the first time ever. This stunning silver coin is a highly detailed masterpiece featuring a hidden inscription on one of the tree branches that changes every year. So put on your best flannel and become one with the forest, and take your shot to win 500 silver trees from SD Bullion, because someone's gonna win it, so why not you? Click the link below for your chance to win.
The silver and gold spot price markets in fiat US dollar terms were a mixed bag this week. The spot silver price closed with weakness, retesting down to around $32.50 an ounce mark to finish the week. The spot gold price pulled back today after hitting another record nominal price high yesterday to close just under $2,750 an ounce ask. The spot gold-silver ratio popped on gold's relative strength over silver to end the week, ballooning back up to 84. I've seen a lot of silver and gold market onlookers on Twitter freaking out about the CME Group's recent raising of COMEX gold and silver margin requirements of late. On a historic 21st century timeline, nominal margin requirements would basically have to double in both COMEX gold and silver futures at the moment in order for their margins as a percentage of position to get back towards historically high levels of near 8% in gold and 15% in silver respectively. We are nowhere near such percentage levels at the moment. Take a gander yourself, especially at the bottom section of the CME gold and silver margin data from the present day nearly, back in time over the last nearly 20 years. Again, we're nowhere near those threshold levels.
Gold, silver, and palladium all surging this week. Joining us right now to talk hard commodities is Max Layton. He's the head of commodities research at Citi. And Max, we looked at gold at a new high on Wednesday. You're bullish on gold even with these gains we've seen in prices. Why is that?
Bullish on gold and silver over the next couple of months. Thanks for having me on the show. You know, quite frankly, gold and silver have gone up despite a number of things going against them. Variables that have been strongly correlated with gold and silver have gone against them over the last couple of months. We've had higher interest rates, stronger payrolls. Chinese demand through July and August collapsed in terms of the imports, and yet they've been marching higher. We think part of that is that China just returned to the market in September, so the premium indicators that you're getting on gold premiums going negative and falling in China, just, you know, they don't reflect the underlying consumption. They're only 0.5% of the price. And going forward, the best bull markets for gold and silver, certainly over the last 20 years, have been when the DM is weak or weakening, the developed markets, US, Europe, and when China is easing and potentially going to strengthen. This is the best setup for gold and silver, certainly for a decade.
At the same time, that undisclosed gold demand is gobbling up about 1/3 of new line global gold mining year after year. Silver's industrial demand remains outstrippingly strong. Supply deficits will likely continue so long as we don't slip into a deflationary depression. Silver's solar demand has been probably the largest contributor to ongoing supply deficits, and there is still no sign of that slowing anytime soon. The Silver Institute dropped a new silver bull video this week, highlighting how important silver is to our collective futures. Have a look.
The need to tackle global challenges is more urgent than ever. To achieve net zero emissions by 2050, we must think of innovative solutions. Fortunately, beneath the surface, a silent conductor is fueling the green energy revolution: silver. For thousands of years, silver has been prized as a precious commodity and a valuable investment. It's enabled trade around the world and inspired artists across cultures. But silver is more than that. It's a mainstay of industry and core to our modern connected lives. Its unmatched conductivity powers virtually all electronics, from the phone in your pocket to the complex circuits and systems found in electric vehicles. Its thermal efficiency and reflective nature mean it's also perfect for harnessing solar power. Silver is a critical component of the photovoltaic cells that generate solar energy. And with antibiotic-resistant superbugs on the rise, scientists have turned to silver's antimicrobial properties to prevent infection and purify water. As we race against time, silver will become increasingly important to our changing world. And responsible mining will ensure its benefits endure for generations to come. Innovators, manufacturers, and investors are already joining forces to unlock silver's potential for a better tomorrow. Silver, the key to unlocking a more sustainable future.
And while U.S. silver bullion investment demand has been notably weakened with rising spot prices this year, 2024, the same is not true on the Indian side of the silver investment demand equation. Indians are buying silver as an investment in decent size, estimated to be about the same as U.S. silver investment demand for the year 2024 in terms of overall ounces. And apparently Indians at the moment have strong silver stacking hands, with little to trivial amounts being sold back into the Indian market. Rather, instead, further positive price expectations abound there. And their spot gold and silver price charts reflect the simple fact that in bullion bull markets, gold leads and eventually silver follows. On the Indian silver demand side of the ongoing story, 2024 may come up just short of 2022's record silver investment demand, but we're going to have to wait and see that yet. But when one of the heads from the largest producers of silver in India, amongst other metals and key energies like oil and gas, was out pounding the table this week on the silver bull case, Anil Agarwal of Vedanta tweeted the following Indian silver pump. He wrote, quote, "Can silver become more precious than gold? Silver is shining. In India, prices have crossed Rs 1 lakh per kilogram. Demand has doubled from last year. Silver's demand is being driven not just by its traditional uses, but by massive industrial demand. It is now being used extensively in solar panels for renewable energy, in EVs, in advanced healthcare, electronics, and many other technologies. This combination of being precious and functional is rare, and the demand-supply gap is increasing. It is the new critical mineral of the future. Our Hindustan Zinc, we are producing silver sustainably with a 100% solar-powered refinery. At first, it was difficult to make silver, but because of our brilliant engineers and technologists, today we are one of the largest producers of silver in the world. Our aim is to be number one and sell our entire production in India. Our not-for-profit industrial park for zinc and silver in Rajasthan will welcome thousands of downstream industries which can do value addition to silver and create lakhs of jobs. So, for rural India to rise and develop from humility into an emerging global power in the decades coming, it's going to take massive amounts of industrial silver inputs into its growing infrastructure and renewable energy fleets to come. That's going to be all for our weekly SD Bullion market update. And as always to you out there, take good care of yourselves and those you love. If you enjoyed this video, hit the like button and share it with those you love. Subscribe to our channel and hit that alert button so you know when we publish new bullion market updates.